Meta just came out with some wonderful earning results at the beginning of February, and they've even announced a wonderful news that will impact many investors. So today we'll take a look at what is the true intrinsic value of Meta. So is it a great time or not to buy this company at the moment? So without further ado, let's get to it right now. Meta, aka the new Facebook, is one of the largest companies of the entire world with a market cap of over $1 trillion, and where the company has gained over 20% of its total value during the 2nd of February following the earnings report. But in fact, Meta isn't a simple technology company, it is in fact the largest social network brand in the entire world. Indeed, by owning 3 of the 4 largest and most used social media in the entire world, which are Facebook, Instagram, and WhatsApp, that all have over 2 billion monthly active users. It is fair to say that Meta has the most power when it comes to the social medias all around the globe. But that's not all. Meta isn't only implied in the social media market, but over the last 5 years, they've also been developing other important markets in their business model. For example, with their subsidiary Oculus that is now known as the Meta Quest, they've been able to develop what is considered as the new metaverse. Well, Meta has still been able to generate over $1 billion of revenue from this branch during the last quarter, which represents an increase of about 50% year over year. Nevertheless, we can still see that their family app, which is composed of all the different applications of Meta, for example Facebook, Instagram, WhatsApp, and Messenger, still represents the largest portion of their total income with about 98% of it. And so only from this branch, this represents some quarterly revenue of about $39 billion in the last quarter, which is up by about 25% year over year. And so this great increase came after a 28% increase of the amount of impressions that came on their different applications during the last quarter. Because in fact, every time that you are seeing an advertisement on every single one of their applications, it means that the companies that will be making the advertisement will be paying a certain part of their total budget directly to Meta. Add to this, we've seen that the last earnings report of Meta was pretty good, where they've been able to beat in every single case the total revenue and EPS prediction of the analysts of Wall Street. And except for the total revenue growth of this business, another factor that has helped them to grow their total EPS has also been the total diminution of their total costs and expenses. In fact, their total expenses have been dropping by about 8% year over year to about $23.73 billion. Unfortunately, the decrease of the total costs and expenses from Meta over the last quarter came after the CEO of Meta, Mark Zuckerberg, has said at the beginning of 2023 that he was actually focusing mainly on improving the profitability of Meta. Nevertheless, one of the best news that came out during these earnings release was notably the fact that they were announcing their first ever dividend that was going to be paid on a quarterly basis. Indeed, they've announced a 50 cents per share dividend distributions that will be coming at the end of February, and that will represent on an annual basis a dividend yield of less than 1%. And so this news was warmly welcomed by many investors that were pretty happy about it, because it means that the company has reached a certain point where they have enough liquidity to give great dividend to their shareholders. So they've reached a certain maturity in terms of their business model, but at the same time they are still focusing as much as possible on the growth of the valuation of it. And so it is a certain way for them to reward all their shareholders for all the great work and for all the valuation that they've gained over the last couple of years. Because by giving some great dividend distribution, it means that they are directly giving them a certain part of their total profit of the company. But unfortunately, Meta also has some darker spots, notably with many important legal problems that they've been facing lately. Indeed, one of the points that might be pretty frightening for the investors is that the company is currently in the midst of many different lawsuits, notably one about the failure of safety to protect children from sexual predators on Facebook and Instagram. It has made that lately the CEO of the company has needed to face the Senate to apologize to all the different families that were affected by these important problems. And so it means that this problem that affect most of the big medias could become pretty expensive for big companies such as Meta to pay to the different victims. Nevertheless, from an investor point of view, after seeing a tremendously bad 2022 where many investors thought that Meta could become the next MSN? Well, we've still seen that the stock has been able to come back and skyrocket during the last 2 years. But before to see if this business is still a great gold mine for the investors, let's discover what is the true intrinsic value of the company. In terms of the valuation measures, we see that the company currently worth about $1.20 trillion, however, with some pretty high price to earnings, price to sales, and price to book ratios, which are all showing that according to these indicators, the company would currently be overvalued. However, in terms of the profitability of the company, we can see that over the last 12 months, they've been able to achieve some incredible profit, operating margin, as well as a great return on equity of about 28%. In terms of their total revenue generated over the last year, we can see that they've been able to generate over $134 billion, and in the last quarter, their revenue growth represents an increase of about 25% compared to the same period last year, and during the last quarter, their earnings growth has been an astonishing 200% of increase compared to last year. Another interesting fact about Meta is that despite being one of the largest companies in the entire world, it has pretty much a lot more cash compared to their total current debt, which represents in total a debt to equity ratio of about 25%. Now, in terms of the volatility of the company represented by the beta on a 5 years period, we can see that this company is quite a little bit more volatile than the overall market with a beta of more than 1, and over the last 52 weeks, we can see that it has been able to achieve a massive return of over 169% compared to about 22% for the overall market. And as I mentioned earlier, their first dividend will be coming at the end of February, and it will represent about 0.43% of annual quarterly dividend. And over the last 4 years, we can see a great progression in their total revenue growth except between 2021 and 2022 because of the hikes of the interest rates. Nevertheless, what is interesting about it is that we can see that their total expenses have pretty much stayed the same between the last 2 years, which has made that their total earnings before interest and taxes has been booming over the last 2 years. Plus, the same trend has been applied to their total cash flow generated from their operation, where they have been growing pretty well over the last 4 years. And when we combine this with a diminution of their investing cash flow and their financing cash flow, we can see an overall great progression in their total free cash flow progression. But now, as always, to determine what is the true intrinsic value of Meta, we'll be using many different valuation models to help us with this task, starting with the Peter Lynch valuation model, which is a simple formula where we add the future growth of the EPS with the dividend yield and that we divide with the price to earnings ratio. And with these inputs, we can see that the results is showing that this company would currently be quite fairly valued at the moment. Unfortunately, since Meta is just starting to pay a dividend, we won't be able to use the second model, which is the dividend discounted model, to find what is the true intrinsic value. But now, in terms of the third model, which is the discounted cash flow model, where we'll be simply discounting all our future cash flow of the company to determine what is its true value. Well, as always, we start by finding what is the cost of the debt, the cost of equity, and the cost of debt and equity, which is giving us our WACC. And so with these inputs, we find that the true intrinsic value of the company at the moment is about $938 per share, which would represent an upside of about 97%, and so it's going to be a buy on that side. And finally, we'll be using the Graham's original value formula and the Graham's revised value formula to find the true value of Meta. And so with both of these valuation models, we find that this company would currently have an intrinsic value of about $1,583, which in both cases is showing that the company would currently be a massive buy on that side. So as you've been able to see in this video, despite seeing some incredible growth over the last couple of weeks and years, Meta is still a company that has a lot of potential of upside for the next couple of years. Everybody now has at least a Facebook or an Instagram, and it means that this type of company could continue to see some incredible growth over the next couple of years. Nevertheless, I'll be a little bit more careful with this type of company for the next couple of weeks and months, since it has seen a a rapid growth in their total value over the last couple of weeks. So I personally believe that the company will continue to grow, but at a slower pace, especially with all the legal problems and all the lawsuits that they are facing at the moment. It is why I've decided to take some profit on the 2nd February after the big 20% increase in their total value, because as a wise man once said, be fearful when others are greedy and be greedy when others are fearful. But now on your side, if you're looking to find other great alternatives companies that are currently quite undervalued at the moment, well, check out the video that's gonna be right over here, and I will see you soon. Peace!